Hey, what's going on, everybody? Riley here again. Today, I'm going to do something a little bit different. So I'm on winter break now for college and have a little bit of time today. And I wanted to show you guys how I do my charting. First off, though, I just wanted to show you guys kind of how I trade during the day. So I lately, just to be completely transparent with you guys, I've been trading for 9 or 10 months now. But I've only recently really started to see everything click, and I've been able to really capitalize and understand what I'm doing in the market. So I'm still tweaking and developing my technique as I go. The way that I went about things, I've always kind of been like a lone wolf, do it yourself kind of guy. Just like everyone else, I started off by following everyone's calls on Twitter. I started off in Atlas Trading. And, I would just kind of blindly follow a lot of the calls that I saw without having any structured plans. And after blowing, a few $100 in a very small account, I got pretty sick of that. So took a step back. That's whenever I started the InvestiTrade course. And, I started the InvestiTrade course at the beginning of this semester that just ended. And I was figuring, cool, now I'm in a chat. I don't even need to do the course. As long as I'm in here, talking to people, I can see what they're doing and I'll be just fine. Now, my mindset on trading has completely changed. I understand how difficult that this is going to be and how much work I'm going to have to put in every single day, which is why I started this YouTube channel. If there's other struggling traders watching this shit is not going to be easy. Like, I have struggled every single day, and I have some very, very good connections. Aside from InvestiTrade, a buddy I went to high school with has made probably over $10 million off of swing trading, completely different from what I do. But, there are the resources there and everything. But you're still alone at the end of the day. You're going to have to figure out how to do this on your own. You're never going to be able to rely on someone else's trading, someone else's eye, their analysis, nothing. You got to figure out how to do it on your own, which is why I really, over the past 4 months or so, I've kind of just, fell back a little bit into the shadows. I've been doing my own research, really grinding. Every time I take a trade, I journal and figure out, if it didn't work, why didn't it work? What could I have done better? And a lot of the time I figure out that I shouldn't have even taken the trade in the first place. So this is all, it's going to take time. It's going to be discouraging. I still get discouraged all the time, dude. Seriously, I just go back and forth. I make money, give it back, make money, give it back. What's most important is that you're a defensive trader. You are working to learn every single day. You're not just magically going to figure it out. It's not going to happen. You're going to have to bust your ass and really, really put your effort into this. It's a skill. A lot of people say it's a skill, just like becoming a doctor. Years and years of college and school and hard work go into becoming a doctor. Trading, even though it's different, the work aspect that you have to put in is no different. You might catch on a lot sooner than other people do, but a lot of the times that's not going to be the case, and that's what I found out. But anyway, after that spiel, I wanted to show you guys how I chart today, so I'm going to get down to that. First of all, this is my regular day trading screen. I haven't shown any live trading yet, not confident enough yet. But I have my active trader over here. And then I have two 1-minute charts that I look at. ES, which I trade SPY options off of, and then NQ, which I trade QQQ options off of. These are the only two charts that I chart every single morning. I don't chart Spire QQQ. I don't even look at them. These are the only two charts I care about. Don't give a shit about anything else. I only trade these two, or I only trade Spire and QQQ. And excuse me, I'm gonna get a drink of water. But the reason for this is I wanted to gain consistency. I'm starting to realize patterns within these two stocks, or excuse me, the futures, which SPY and QQQ trail literally perfectly. Let me show you real quick, in case you're not understanding what I mean. Let's just take a look. We'll go to, I don't know, we'll go to the hour chart. Hello? What is happening here? Okay. So this has after hours on, of course, but oh my. Okay, hold on a second. Let's see. So you can see how these two mirror each other, right? Do you see what I'm pointing out right here? Where did I put this one? They do pretty much the same exact thing. So that's why I trade SPY options off of ES, or this is like the S&P 500 futures, and I trade SPY options off them because SPY mirrors ES and QQQ mirrors NQ. You're just gonna have to believe me. I'm not gonna go through that again. But anyway, I'm just marketing in and out of trades right now until I'm comfortable enough to start doing limit orders. I know I'm wasting money on slippage or whatever else, but I don't care. All I care about is if my trades are working, and then eventually I'll be able to, move on to bigger and better things, limit orders, and really maximizing my profits. But real quick, I'm going to create a new drawing set. And I'm going to show you guys how I chart. So I'm going to do NQ. So this is the NASDAQ futures. I start off on the weekly. Excuse me. Wintertime has my sinuses and everything real messed up. But basically, first thing I do on the weekly is I look for, first thing, so go to settings here. If you haven't done this, snap drawings to OHLC. That means open, high, low, and close. And this will make sure that you're able to accurately pinpoint supply and demand zones, chart patterns, because it will lock on. See, if I have a price level, say you're putting in a supply zone, just pretend that this is a supply zone, right? So it will, see how it just snapped? It snaps to the open, the high, the low, and the close. And that makes it so much easier to get accurate. Oh, what just happened there? To get accurate zones. But anyway, you get the point, right? It just snaps to it, so you can get the exact level of where that supply zone would be. That snapped to the wrong thing, but you can snap it to the close there. So anyway, that's just a little tip. If you're not doing that, you definitely should. My zones were not matching up with Carmine's for a while, and this made it so that they were. But I'm just going to go ahead and mark out any chart patterns, trend lines that I see, higher time frame. So kind of see this this flag pattern here, and then I also have been seeing this ascending wedge. And you don't have to like line it up perfectly. I mean, I just do what I see, and then react based on how price and basically I react on how price price reacts whenever we approach these lines, trend lines or zones. But anyway, so after I mark those trend lines, and you know what? Hold on real quick. I'm going to change this a bit. I'm going to make it line up a little bit better. Anyway, once I get those marked out, I go ahead and mark any recent supply and demand zones. On weekly, it's not like super important because with my scalping style, chances are we're not going to be moving on a weekly time frame anyway, if that makes sense. Just mark the nearest supply and demand zone. So right now we've got this one. And I apologize in advance. This video is probably going to be like 30 minutes. It takes me a while to chart, but this would be weekly. So I mark that. If it's been used, I forget who I got this from, but like if it's been used a little bit, it was probably Matt H. Look up his YouTube videos too. Super helpful. Excuse me. So if it's been used, I just put a little U there. If it's been used 3 times, 3 U's, you get the point. If it's been like used and had a heavy reaction, you can do an uppercase U. This one is unused. You can tell it's not been retested yet. So just leave it like that. I don't see any supply zones on the weekly. So, but real quick, I will mark key levels real quick. So weekly key levels. The only one that I really see here on the weekly is this higher or prior all-time high. You can see that price came up, made a high here, pulled back, bounced off the lower trend line, and then broke through that and kind of used that last all-time high as support. So buyers are defending this area, and I consider that a key level. For key levels, I just put on the left extension, make them dashed, and then I do weekly PL or KL prior all-time high. And I'm actually going to just get rid of weekly. Okay, so we've got that one marked. You can also mark, just all-time high, just to have it marked out. Just make sure I don't see anything else. You can see, basically for my key levels, I find points where we have used, we've used them both as consistent support and resistance. So you can see here it was resistance, broke through, became support. It's not like the best example because it's weekly. There's not that many touches. But another example could be right here. I'm going to look on the daily though, just how we consistently reject this level here. You can see all those long upper wicks. Long upper wicks are a good place to look for key levels. So I'm going to go down to the daily, see what we see here. So, also a new thing I just learned. I'm not sure if you saw how it stayed zoomed, how I had it on the weekly whenever I switched to daily. See how it doesn't really change and doesn't zoom all the way back out, so you have to refine your place. Just go to settings, time axis, keep time zoom. I literally just started doing that today. It's so helpful. You're not going to have to zoom in and, realign everything every time. But anyway, getting on to the next thing. So here, I'm just going to go ahead and mark any supply and demand zones that I see real quick. So I kind of see like a head and shoulder pattern here. But I'm just going to go ahead and mark out this supply zone. And if you guys have any questions, feel free. I am not the best at this, and I do mark a lot of zones and stuff like that. But, I'd be more than happy to help answer any questions if you guys are curious about anything. But this is daily supply, so just mark it daily. Now this is one here, but it's been invalidated. Let's see, we have more demand down here, so we will go ahead and mark that. Now you could put it down here or here. It's up to you. Buyers were present in both areas. You can see the long lower wick, but I'm just gonna actually I'll put it down there. Really, the main thing to understand is that this is really kind of like an art. Everyone's going to do it differently, as long as it fits your trading style. Nothing else matters. Here we go, daily, and we've got a supply zone up here. Kind of been invalidated. See how we broke above, and this is daily. So I bet if we zoomed in to like 5 minute, we would see a few closes above. But since it's kind of been invalidated, I'm not going to put the rectangle there. Ooh, what just happened? I'm just going to put this line there. And if I'm only putting a line, I make it either red or green based on supplier demand. This is daily, and this one is used. And I think it had a pretty big reaction. So put a big uppercase U. But actually, if you look, it's been used once, twice. So go ahead and fix that real quick. I'm just going to put UU. Anything that has not been retested, like this one up here, I usually put, I don't know why, I just put some stars there. If it's higher time frame, unused higher time frame zones are going to, be very good areas to look for setups to form. So weekly has not been retested. And this daily has been tested once, twice, 3 times, 4 times. You can see we came inside of it, got bought back up, then came back inside of it, got back up, etc. Every time we do that, we're taking out of some of the limit orders and this demand zone, and it becomes lower quality. So it's important, just to give yourself some extra confidence. If you got short up here, or say up here, and then you see price come down in this zone, you might automatically, like if this was a fresh zone, you might just use this as your price target, automatically sell out. Regardless, you could use it as a profit taking area. But if you see that it's used, like just so used up, it becomes lower probability. That might gain you an extra little bit of confidence to hold on to your puts and wait for a reaction down here, down at this trend line, etc. So it just gives you some good additional context. So let me just look real quick, see if I see anything else. I mean, you could consider this demand down here. I wouldn't really, but it looks like it was respected over there. I'm not really going to mark it because it literally only goes down to here. And if we get through this demand, I'm fairly confident that we can push back down below this one. You know what? But a lot of the time, I will mark everything I see just to have them as reference points. It doesn't matter. Like if you see price come into this demand zone, let's say this was a brand new fresh demand zone, that doesn't mean anything. What matters is that you get your confirmations, you see a long lower wick, you see that buyers are present at this level, and then if you see a chart pattern or something else like an RBR that's giving you a valid entry, then you can use that as confirmation to get into the trade. Having these reference points is very valuable because that's not a high quality demand zone. See, it just got hit this key level and then, so I'm not going to mark that one. Anyway, yeah, so having these key levels, these demand zones, all that is very important. Not necessarily to be like, hey, this is definitely going to bounce here, but just to use them as reference points to gauge market participation. So, and I do not see anything else So go ahead and move down to 4 hour. Maybe zoom out a little bit. Oh, okay. So here on the 4 hour, if I'm inside another bigger zone like this, and to be honest with you, I am kind of not liking marking out like weekly demand and stuff like that down here because it's just so large. I'm probably going to start just putting a line soon. But if I'm inside another zone, like here, I'm inside this daily supply zone, I just put a line 4 hour. Don't change the color or anything, but this one is unused. So just give it the stars. And those are just attention grabbers. When price comes up to this level, if I'm long, I am going to be very defensive because it's a fresh supply zone close to all-time highs. And, if I was looking to get short, I could see higher quality setups form around this area. So it's very important, mark used, fresh. It becomes very helpful information whenever you're looking for trades to develop, especially as a scalper. You got to look for these trades intraday to set up. Anyway, real quick, I wanted to do those daily key levels. So, and keep in mind, I am no master of this. I am not a consistently profitable trader yet. I'm just a struggling trader trying my hardest. But here's another key level. You can see that we have used this as resistance multiple times. I can't really seem to get above this level. Go ahead and extend this to the left and mark it. Daily KL. And also on NQ over here, you can see that we've been in this balanced period for quite some time. I just want to go ahead and mark the lower trend line too, because you can see all these long lower wicks and how we've kind of been respecting that level. Well, we also used it. So it was support, kind of resistance here. This was more so resistance, but we closed below this level. And then over here on the left, here, I'm just going to mark the line real quick and extend it so I can show you. And sorry about all the noise. I got my furnace going and all kinds of stuff. This is daily level. And actually, these ones, I've been making these blue because it's a really key balance area. So these two are blue because we've literally just been trading in this range for, all this time, about a month or whatever. But you can see how this was used as support so many times, traded in this little region, resistance, kind of closed below or like resisted here, support, bounced up, support. So it's a key level. And, you just want to mark stuff like that when you see it. There's probably another one we could find up here. Just look for these wicks. Look at where we have used areas as support and resistance multiple times. So there's like kind of multiple up here. I think I would mark probably this one here. It's got support here. Let me extend it real quick. And like I said, I know I put a lot of these zones in and a lot of these key levels. It is to give myself points that a lot of retail traders are looking to judge market participation. If a lot of people have these key levels marked, I want to have all of them marked too so that I can look for these intraday scalp setups to facilitate. So you can see kind of resistance here, support. Not the cleanest one. So I will say, meh. It's kind of like a meh daily key level. And you know, there's one a little bit further up too. You can see support over here, support, and resistance. Actually, you know, that one might be higher quality. But nevertheless, you know, we've got a key level here, so I'm just going to leave it at that. Now we will go down to 4 hour. Sorry this is taking me so long, guys. Mark any zones I see how we've been trading in this balanced period for so long. So a very good place to look for a trade to facilitate would be if we could find buyers above this level or sellers below this level. A lot of retail traders have their eyes on these two levels here. So, you know, we want to be on lookout to break out of that balance, and then we can look for very good trades to facilitate, or, you know, we could hop on the momentum and kind of just ride it. That's what I've been doing a whole lot lately. So, you know, since we keep kind of coming up here and not necessarily invalidating, but retesting supply, I kind of just ignore all this noise over here and mark out the most recent zone, which would be right here. So since I'm marking this 4 hour fresh supply right here on top of this daily used one, I'm just going to remove that. Kind of help keep it from being too cluttered. But so this is the fresh supply here. You know, we have all this supply over here that's just been constantly retested, and it's basically confluent with this one right here. So I just want to mark where the freshest supply is, and then we can look for demand zones too. When you see any of this chop, like just crazy chop, you don't even have to look in the middle. I mean, unless it's all the way over here. All of, like, as soon as we chop like this and then come back down, all of this is invalidated. So you got to always look to the left first. But if you see all this chop, chances are you only need to mark the most recent zones because all the other ones have been invalidated. Sorry if that made no sense. I kind of feel like I'm talking out of my ass. But so I'm going to go ahead and mark. Let's see, we've got not really demand there. We've got demand here. Kind of zoom in on that. So we've got 4 hour demand, and it looks like it's perfectly confluent with this key level. So this prior all-time high, I'm just going to put and 4 hour fresh. No point in marking a second line right there, you know. Oh, not fresh anymore. So it's been it's been used 3 times now, actually. So we will go over here. Okay. And since we've used this demand zone so recently, and this is kind of our lowest one over here, other than this daily, you know, I would go back over here and look under this daily key level here, see if there are any more 4 hour demand zones. Oh, geez. See what we can find real quick. Okay. So we had that daily demand zone marked right here, and that is actually confluent with a 4 hour demand zone, and it's fresh. Both of these are fresh. So this isn't like the cleanest 4 hour demand zone. It's not an RBR. It's really just like a base rally, but I still mark it nevertheless. So for this, I'm going to put daily and 4 hour fresh. Let's see. It's pretty much just chop all over here. Not really too concerned with any of that. Just for shits and giggles, we will mark this one out too. And this one is fresh as well. You know, never know when you're going to have a larger move. So just have all those marked out. I'm going to see how long this video is. It's already 30 minutes. Wow. Okay. So I'm going to go ahead and auto zoom, get back over here. So we've got zones marked below. We've got zones marked above. Now I just need to mark, over here. So this is like I don't really see any demand zones here. You can see whenever we tried to form demand here, this would have been a DBR. We kind of just got destroyed by sellers. So I don't see anything quality to mark yet. You can mark a line here and, see how it, well, no, never mind. I don't see anything quality down here yet, so I'm not going to mark anything. This is a demand zone, but it was invalidated. You can see we closed below it. So yeah, marked out pretty much everything I can on the 4 hour, moved down to the 2 hour now. And just kind of look for anything else. I see a 2 hour supply right here. So I'll mark that out. And as you can see, this does take me quite some time. I do my charting and then I do my market analysis and then I decide, what setups I want to take. But setups will probably be a different video. We got supply here, been invalidated. All of this kind of invalidates or maybe not invalidates, but uses the prior supply. So just look for the most recent one, which we don't really have a 2 hour supply over here. Let's see if we've got any demand. So we do have 2 hour demand over here. It's been used, but mark it anyway. Like I said, you want these as reference points. Even though they've been used, you still want to see how buyers or sellers react to those zones, if they are defending them or if we just slice through them. So this has been tested twice. 2 hour used. Nothing really, nothing really in between. But let's see. This is a 2 hour here that has been used once, not quite twice. 1, 2, 3, 4, 5 times. So this is definitely just a reference point, not high quality at all. And I only put like smaller time frame zones right around where price is at right now. So I'm not going to like go all the way down here and find 2 hour zones. We already have the higher time frame ones. I only like lower time frame ones where I'm going to be trading and looking for setups to use them as reference points. But that looks, we can mark this one too. This is a kind of a 2 hour demand here. I'll just put 2 hour, and it's been used once, twice, 3 times. 3 times, okay? So now that is done, I'm going to look at the 1 hour, and this is the last, higher time frame thing that I chart. So I see a 1 hour supply up here. It is unused, so I'll put fresh. Also see like a basing period here on a little DBD. So I'll go ahead and mark that 1 hour. Fresh. And I'm going to put a rectangle on this just to give myself a reference area. Hopefully eventually I'm faster at this so that I can, speed up the videos for you guys. We got another one down here. You can see we formed this DVD. It's been retested about a bunch of times, but I'm going to mark it nevertheless. Once again, reference points, very important, at least to my style of trading. 1 hour. I think it's been used like 5 times. 1, 2, 3, 4, 5, 6. So, that's good enough. If it's got more than like 3 U's, I'm figuring it's not very high quality. Higher time frame zones can be used a lot. Just depends. That's why I like to have them as reference points, like I was saying. Okay. So let's see if there's any demand. So, this is like a 1 hour demand zone, but I don't want to mark that just because it's going to make it cluttered. We've got this 2 hour demand, which is higher time frame, literally a few points below. So there's no point to get extra cluttered, especially if you have a higher time frame zone that close. I just leave the higher time frame one. You can mark it if you want to, totally up to you. And also, I already can kind of see the more screen time you get kind of better at starting to see these patterns. It's not really the cleanest, but so look at that. We are in demand. Not quite at the bottom of this channel, but we are at the key level that we've bounced on 3 times recently. And we've got this pennant forming. So right here, on Monday, if this is still working out, a break of this to the upside, we could slice right through this extra used supply, targeting this daily key level, but mainly this fresh supply above. And then if we slice through that, we can make it all the way up here. That'd be a beautiful trade. So that's kind of how I facilitate my trades, but I will get rid of that real quick. Sorry about that. That is how I do my charting. I do weekly, daily, then I do 4 hour, 2 hour, 1 hour. I find key levels on all of these time zones, time frames. Usually I do daily, 4 hour, and 1 hour. It really just depends. You got to kind of figure out your best way of doing things. And once you figure out your trading style, you'll be able to adapt your charting to match it. And that's a really good feeling, by the way. I know I have a lot of zones marked, but that is how I trade. And all of them have meaning. I don't just put shit on the chart for no reason. Speaking of, so another thing that I do, I'm going to do 5 days, 5 minutes. Zoom out a bit. I mark, so this is the 17th. Okay. Let's just pretend that we are about to trade this day. So like we would be charting up till 9:30 right here. What I do is a lot of retail traders have their eyes on the yesterday's high of day and low of day, as well as the prior close, somewhere around right here, and then pre-market high and low. So yesterday's trading day, or we're just saying quote unquote yesterday, even though it isn't. You can see we opened right here. This is our high of day, right here at this 4 hour unused supply. But I do, this is yesterday's high of day. I'm do left extension, and I use these as key levels too. Not really necessarily key levels where we may reverse, but if we're able to slice through these, we get a lot of retail chasing the move. Just a really good reference point, just like the other zones and key levels I've marked. But anyway, yesterday high of day. See how that's kind of overlapping. Oops. Anyway, I'm going to leave that because I'm going to use this chart tomorrow, but I would just put it next to this 4-hour supply and say yesterday's high of day. Anyway, we'll find yesterday's low of day. So this candle here, this is our low of day here. Okay, and then we do the prior close. So we closed right here. And you can kind of see how pre-market action respects these levels, or like if it's rejecting them or easy to slice through them, that can give you an idea if we have bullish or bearish sentiment, or like what levels are being respected or defended. So I have certain colors for these different levels, but to each their own. Literally just do whatever you're comfortable with, and eventually you'll figure out what works and what doesn't. But I also mark pre-market highs, and for pre-market, I used to overthink it, and I'm like, well, is after hours included in pre-market? Like, should I do it from like 4 p.m. the last trading day to 9:30 a.m. this trading day? Yeah, that's how I do it. But I used to, mark different for after hours versus pre-market. And that just doesn't make any sense to me. All of this is pre-market, 4 o'clock to 9:30. That all happens before the market opens. So let's zoom in a little bit. This would be our pre-market high. And I have found lately, like, I really like using these as reference zones. If we reject pre-market lows and continue lower and have heavy selling volume, that is like a very good opportunity to get short, at least recently. It seems like NQ really loves to just keep falling if we're able to reject pre-market lows. So, eventually you learn the characteristics of what you're trading. Having these levels marked helps with that. So, okay. So, we've got pre-market lows. I just want to make sure real quick that those are, oops, I almost just deleted all of my work. So, make sure real quick. So, just to give you an idea, see how we came up above. So we bounced double bottom off pre-market lows here. Very key level that means that buyers are defending this level. And there was other context. I actually took a few losing trades off this. I was in puts down here. Horrible move. You can see we're in demand. I have another video on that if you're interested. It's my last one I posted. But you can see double bottomed here. So bullish, you could have found a long entry down here. You could have even scalped up here, this longer time frame or 5-minute RBR, anticipating a break of the prior close. But you don't really have much range because of this supply zone. Anyway, see how we kind of struggled to get above pre-market highs, and then failed to find new buyers up here. There wasn't a lot of volume. I mean, we had this little volume spike, but then kind of died out. That's a bearish signal. So you could have, found an entry as soon as we broke back below pre-market lows. I also, I don't really see any clean chart patterns. I mean, you can kind of argue that that's like, I don't know. No, I don't see that. But anyway, you can look for certain chart patterns up here, up at this above pre-market highs. If you see an ascending wedge into supply and see it break to the downside, I think that is a pretty good opportunity to get short. you know, and set a stop at a close back above the lower trend line of the ascending wedge, or, you know, however you do it. But using these levels has helped me to figure out where to look for trades so much, because a lot of retail traders use these levels. So once we got up above pre-market highs after struggling, volume was kind of dead, and then we had this huge rejection. You could easily look for an entry somewhere over here. And if you find a valid entry, you can just write it for as long as it goes, you know, using these levels, looking for, I always use the 1 minute and look for a close above or below these levels. And kind of, okay, so just to give you an idea, let me see if I could have found a bearish entry on this. So we keep struggling to find buyers above this level. So I'm not saying I would have played this, because I like to play chart patterns. And if this is a pretty balanced, choppy day, so it's very easy to get shaken out. But let's just say that I was anticipating a drop. Oops. After this, I'm actually going to remove that. Okay, so I was anticipating a drop right here. You know, we rallied back up above high of day, and literally like wicked back down to high of day. There's sellers up here. We're not finding really any new buying volume. There's a little volume increase, but really nothing significant. So let's just say I got short as soon as this candle closed, this basing candle after this drop, anticipating a DBD. So I would put my stop above the wick here. So that would be my stop. And then I would kind of ride the trend down. And I would have these different levels to watch, you know, along with intraday demand. See how this is a 1 minute demand zone. This is another 1 minute demand zone. You can mark these out and see how price is reacting to these levels while you're just following the trend. Literally, you get in the trend, follow the momentum, and watch how price reacts to these levels. So right here, this would have been beautiful trade down to demand. You can see we had this very strong selling candle close below pre-market highs. That's exactly what you want to see. I would look for a close below this to stay short. Here we retested and rejected with the basing candle. That is beautiful. And then here, once again, retested, rejected, and closed inside of this demand. That means that buyers aren't really present there, because if they were, we would have a lower wick. And then here we kind of try to get back out of demand, you know, test to see if buyers are still there, but they aren't. We have a wick there, and we're just kind of basing. And then we continue the trend down. A little bit of hesitation here, but you know, I might have sold there with that hesitation. But nevertheless, especially we had like a little increase in volume. Where is it? Yeah, a little increase in volume. So, you know, I might have taken one off there, but then we pushed right down and hit the target if this was our target. So that is how I use these levels that, you know, are all over my charts to facilitate quality trades. You know, everyone has their own style. This is mine. I can't say that I came up with this all on my own. That wouldn't be fair for me to say, but you know, this is what works best for me. So I'm going to stick with it. That's all I have for this video. I'm sorry it was 35 minutes long, but I think there's a lot of value in this video that kind of gives you an idea how valuable the chart is. There's a lot of these levels that people are looking at that once we get a rejection, like I was showing before, go back to that real quick. Like I was talking about before, you can, if you're a scalper and you see that there are sellers obviously are defending, like sellers are heavy up here and we keep rejecting this level. Look at how many times you could have played it. If you would have gotten in right here at this basing candle, set a stop up above the top of the basing candle, you would have teased your stop, but you could have stayed in. And we've got kind of like this flag pattern forming, not really the cleanest, but then we broke down to the downside. And this could have been a valid entry here. And you could have got a really nice spike on the premiums here because of that volatility. This is how I play. I look for these levels that all these eyes are on, because I guarantee you somebody else had this charted out. And once we broke this support level, or I don't know, it's not really a clean flag, but you get the point. Once we broke here, I guarantee you there were other people, other retail traders that were chasing this. Get a nice spike in the premiums and sell right here, because we've bounced here before. So if you see any buyers present here, and look at that increase in volume. So there's obviously buyers present here, or the zone is active. So there might be buyers there that push us for a leg higher. So just get out here and then wait for your next entry to show up, and respond to how price reacts to these levels. For example, this could have very easily not worked out. This trade here I was talking about earlier, if we would have closed above pre-market highs on this candle and then retested here and then closed above, I would have gotten out, or not necessarily. I would have gotten out when it hit my stop here. But it's all about how price and how buyers and sellers react to these levels, if they defend them, if we're able to slice right through, just kind of understanding the auction process and then combining it with market context. For example, see how balanced we were here chopping around. You get in this move and you get this great move downward and you're so excited. So you hold, you keep holding, and you expect it just to go far down. But look at all this chop. Chances are we're not going to get that overextended. We're already kind of overextended here on the 1 minute. Look at how many red candles in a row. So combining that with the context of this choppiness, with the context of, I don't know, the overall day's balance, we're just kind of going back and forth and back and forth and back and forth. We haven't picked a direction. You kind of get a feeling for it along with screen time, and then you would learn to take profits here. And sure, you could hold and it wouldn't have hit your stop loss. You could have held one and taken it all the way down to yesterday's low of day, or VWAP, and I had a great trade here. So just figure out your way of trading, adapt, and come up with things to chart that help you in your trading style. And as long as you keep adapting and learning and journaling, I think that it's really impossible to fail at this game. I have failed for 10 months and I'm still confident that I will make it. So I'm going to end it there. 40 minutes now. Hope you guys enjoyed this video. And once again, if you have any questions, any feedback, feel free to reach out to me. And thank you very much for watching. And I hope you guys enjoy the last little bit of your weekend. Peace out.